Welcome back to FX Titan. Have you ever noticed how markets move like trends in real life? It's like spotting patterns in daily activity. Some predictable, some surprisingly. Today, we'll decode price patterns in Forex and relate them to things you encounter every day, like flags, triangles, and even hairstyles. Promise you'll never look at charts the same way again. Let's jump in. Think of an ascending channel like a hiker climbing a mountain. They zigzag up the trail but keep making progress upwards. The Forex market, an ascending channel forms when the price bounces between two parallel upward sloping line. The bottom line acts as support while the top line acts as resistance. Just like our hiker stops for water, breaks, which is retracement, the market pulls back before continuing higher. Now, picture a ball bouncing down a staircase. That's your descending channel. A series of lower highs and lower lows. The price keeps moving within two parallel downward sloping lines. The top line acts as resistance, the bottom line acts as support. Like the ball, the market keeps going down but bounces along the way. It's a downward journey, step by step. Now imagine a group of kids arguing in the park over a game. It starts small, but their voices get louder and louder. The argument intensifies. That's like an expanding triangle. In Forex, this pattern forms when price swings gets bigger over time, creating a triangle that widens outwards. It shows increasing volatility, like the kids' voices. Eventually, the argument ends. The market picks a direction, just like the kids finally agree. A rising wedge is like water flowing through a funnel that's narrow at the top. The price moves upward but within a tightening range, signaling a potential reversal downwards. On the flip side, a falling wedge is like an upside down funnel. The price moves downwards in a narrowing range, but is usually a bullish pattern, meaning the price might break out upward. Think of wedge as a market squeezing before they pop in the opposite direction. A bull flag is like a flag flying on a tall pole during a windy day. The pole represents the strong upward move, and the flag represents the market consolidating sideways or slightly downwards before continuing the trend. A bear flag is the opposite. It's like a flag flying upside down. The pole is the strong downward move, and the flag is the consolidation before the market continues downwards. Remember, the pole sets the direction, the flag shows the pulse. A head and shoulder pattern is like someone shrugging their shoulder. The left shoulder forms as the price rises and falls slightly. The head forms as the price rises high, and the right shoulder minus the left. This signals a reversal from the bullish to the bearish. An inverse head and shoulder is like someone shrugging upside down. It's a bullish reversal pattern where the market moves from bearish to bullish. A double top is like a basketball hitting the rim twice before falling back to the ground. It's a bearish reversal pattern showing the market couldn't break the resistance level twice. The double bottom is the opposite. It's like a basketball bouncing twice on the floor before going higher. It's a bullish reversal pattern showing strong support. That's it for today. We have covered a lot. We looked into channels, the ascending channel and the descending channel. We also looked into expanding triangles, and we looked into wedges. We have the rising and the falling wedge. We looked into patterns like the flags, the bull flag, the bear flag. We looked into head and shoulder pattern. And finally, we spoke about double top and bottom. Think of these patterns like spotting trends in everyday life. They're everywhere once you know what to look for. If you enjoyed this video, give it a thumbs up. Subscribe to FX Titan and hit the notification bell for more beginner-friendly Forex lessons.